Hello guys, and welcome back to another video by Vertex Investing. Tan's here, and all I'm going to do is show you a breakdown of a trade that you could have taken with a strategy that I taught for free in our webinar. Now, if you haven't watched the webinar video, which is the previous video to this, make sure you have watched that to understand the basics and understand the foundation before jumping into this. Now, what I'm going to show you is a trade that I've taken myself. However, the entry point that I'm going to show you is an entry point that you could have used using the free strategy that we've shown. But I'll show you my trade afterwards, which is a little bit different. But yeah, I'm going to show you what's possible from what we've already taught you. So what we need to find out first is identify the trend, right? Now we can see it's obviously clearly bullish, but what we can see is although we've broken structure here, right? Which is what we're looking for. We've broken this structure and broken this structure. There's nothing here to indicate there's an OB here. Everything is already mitigated, right? Now, if you don't know what I mean by mitigated, I suggest doing your further research into order blocks just so you understand it. Or obviously join our course or our bootcamp to learn exactly what I mean. I'm not going to teach you obviously in this video, but we carry on. So we go to the 4 hour, and what can we see? Now this is a lot more clear, right? So what can we see? We can see an impulsive move which broke structure, but then if we look down, we can see our order block. So that is our point of interest, right? You can trade off this order block if you wanted to, but the reason I wouldn't is because the stop loss will be like 27 pips, which that's huge, right? That's massive. For us, we like to find a 5 pip stop loss max. But the strategy that you'll be using, you probably have like a 5 to 10 pip stop loss, or maybe a little bit more, but it's still going to be minimal, right? But anyway, I'm going to show you how to refine it. So that's our order block. Make sure you include the wick. If the wick is longer than the previous candle, so if it's longer than your order block, just make sure you include that, because there could be some information in there. Again, I could explain it, but I'm not going to. I'm going to try to hold back because I do get a little bit excited and sometimes might say a bit too much, so I'll just be careful what I'm saying. But there's a reason for that, which we teach in our course. But yeah, what you're going to have to do is make sure you highlight both of them. But we're not going to trade off here because that's far too big a stop loss, right? So we're just going to go through whatever time frames that you have. Not everyone has premium trading view, which I'm not saying that you need. Sometimes you can get some crazy refinements, but I'm just going to go to the 1 minute today. But just go through the time frames and try to find clear order blocks, right? Now, if you do enter, say for example, this order block here, that's still valid, but you still have to put your stop loss below the low, below this wick, because it's still included, right? But anyway, we're going to go through and see what we find. So I'm going to just jump all the way straight to the 1 minute because I know there's something in there. Why has it gone that far back? God. Okay, there we go. We're here. Okay, so now what can we see? We can see a very clean order block, right? Now, there's a reason why I'm saying it's clean is because, I don't know if I should explain it. The reason I'm saying it's clean is because, as you can see, as you can see from here, right, is you can see a lot of consolidation. Although that's an order block, you can still see a lot of consolidation here. This is just fresh, right? There's another reason for that, which I won't explain in this video, but that is our order block here. There is a way to refine it as well from here, but it's up to you to find out for yourself, or of course join our course. But yeah, as I said, this strategy you can just use as it is, and it's absolutely solid. And if I could go down to the 30 seconds, if some of you do have it. Oh God, where's it gone? Where's it gone? I don't know what just happened there. Oh right, okay. Maybe I can't go to 30 seconds for you guys. Okay, let me go back to where I was. Apologies. I didn't realise it won't show me that. Okay, there we go. So let me go back to the 1 minute. So that's where we were. Okay, so we've got our order block sorted, right? There we go. But from what I remember, because it's what I highlighted as my point of interest, there's a 30-second OB which is in here. Now, For this trade, you can either use, so this is our entry requirement. Our entry is here, our stop loss below here. You can alternatively, if that's too big for you, you can just 50% this, right? So you can 50% from wick to wick, and I didn't even click on my fib. So you can 50% from here to here. My fib's a little bit weird. I've just turned everything off and kept the 50% because that's all I use. I don't use anything else. If you want to know why, just make sure you watch our webinar to understand why we don't use fibs the way that most traders do. But yeah, so you can mark out the 50%. So in this situation, for this example, I'm going to show you the 50%, the 50% entry, not the open. Actually, I'll show you both. I'll show you the result of both of them. But now that we have that marked out, right, all you have to do, so let me show you where I was when I first saw the trade. Okay, so this is where I was. So I saw that they're starting to pull back and we've got the break structure, right? Now, this isn't the entry I've taken. However, this is the entry that you can take with the strategy we've shown you. So you've got your entry point at the 50% here. I'll do them both so you can see the difference. I'm going to put it a little bit lower. Okay, so that gives you, you know what, let's just make it a 7 pip just to make it rounded. And I'll do another one at the open just to show you the difference, and I'll put it at the exact same stop loss as well, so about there. Okay, now TP wise, what you have to do, if you go back to the daily, right, and all you're going to do is just look to the left and find some targets and try and break some structures, right? So obviously you can see it's bullish, and price can react to any bearish order block, and all you have to do is just monitor price and see if it breaks it or not. But ideally just follow the order flow and follow what market structure is showing you, right? So ideally we want to break these structures and we want to see where our potential points of interest are for a sell, right? Now if we go to the weekly, what can we see is, if we look to the left, we can see a very clean order block here which broke this structure and this structure. So that's a very strong point for a possible reversal, right? So all you're going to do is just simply just mark it out, mark out the open, and just watch price to see whether you want to close the trade or not. And then alternatively find another order block and see what happens there, right? So you can have a pretty huge target. If you go back to the 4 hour and just place your targets to here and targets to here, so that's your potential TPs. Alternatively, just trail the stop loss and see what happens. How you trail is completely up to you. That's completely like your preference. But yeah, so one can give you a 36R and one can give you a 64R, right? Now if I play this trade out, let's see what happens. So we've got a perfect trigger, and if I'm gonna rush it, there we go. So this is price at the moment. So if you entered on the 50%, you'll currently be running at 35R, and if you entered on the open, you'll be running at 19R, so just shy of 20R. Right, and that's in the space of, this is quite a slow trade to be fair. Yeah, in the space of 18 days. So it's been a fair while, but still, you can't really complain for 35%. Or if you use 1% of your 1% risk, you know, for 35%, 18 days, it's pretty calm. And if you are going to trail your stop loss again, it's completely up to you. Personally, I just trail the lows on either the 4 hour or the 1 hour time frame, because if you think about market structure, I'm not going to go into too much detail, but if you're in an uptrend, you want obviously new highs being created and you don't want your lows being taken out. So obviously, ideally, once you get a break structure or a new high, you want to put your stop loss below each low. Okay, and if it does break it, then potentially market structure is starting to shift. Right, but as you can see, it's fairly straightforward, right? And again, if you haven't watched the first video, the webinar, which is the previous video, make sure you have seen that before you watch this video, or just watch it back just to make sure you understand the concept behind it, because without understanding the reason behind this trade, you'll really struggle to trade using this method, right? So make sure you understand that before taking trades like this. But I wanted to show you a breakdown example of what is possible. Now, if I show you my entry, however, so this is what we teach at Vertex. Let me get rid of what I've just done, that one and this one. So my trade, I didn't realize I made so many marks there. Okay, so my trade's currently running at 130R, and I've got a 2 pip risk to reward. I'm not going to tell you, obviously, I'm not going to explain the entry, but this is what we teach how to trade at Vertex. So you can see the difference, but exact same trade, right? So either way, the strategy we showed you for free is obviously valid, but this is the exact same trade, but just a really refined entry. And this is what we teach you how to trade with precision. Okay, so again, make sure you watch the webinar just to understand how we trade at Vertex. And obviously you could contact us at any point. Send us an email, send us a DM on Instagram, whatever, or Telegram even. Make sure you join our free group as well, to find some more educational content. And currently what we have managed to do is bring a monthly subscription for either our bootcamp and our our course as well. So you could pay that off in a monthly fee just to make it a little bit easier and more affordable, and just more affordable for everyone to get involved, because what we teach at Vertex is absolutely unreal. And I've just shown you a strategy for free, and it just shows you the theory behind it and what is possible. And the feedback, I just want to say thank you all for the feedback that we have received from the webinar, because it makes this all worthwhile and makes it worth doing, because we enjoy seeing the results that we have from our students, and hopefully we see you guys soon. But for now, I hope you enjoyed this video, and make sure you subscribe to for more content really. Other than that, trade safe and manage your risk.